Hello, I'm Wale Famrewa. Welcome to another edition of Banking the Future, a series of special discussions that delve into the ongoing evolution of financial services in Nigeria. It's in partnership with Union Bank as the lender commemorates a century of banking business. On today's program, we examine the concept of smart banking, using technology to revolutionize the business of banking in Nigeria. In the first part of this discussion, we review the adoption of digital banking in Africa's most populated country. And we also discuss links between digital banking and e-commerce. Joining me for the first part of the conversation are Folorunsho Orimoloye, Head of Alternative Channels at Union Bank. Wale Faroun is the founder and CEO of netplus.com. And Olatunji Odumuboni, Senior Manager, Technology Advisory at KPMG. All right, let's start with you, Folorunsho. Just help us appreciate, how far we've come in terms of digital banking, smart banking in Nigeria, the level of adoption, and what's available right now.
Okay, my response to that is that we've come a long way. We've made some good progress, but the progress has been missed. Why do I say this? I'm going to give you some statistics to back this up. If you look at the NIPS report, for instance, and that's the Nigerian Interbank Settlement Scheme, by 2014, on the positive side, Nigeria, the volume of total electronic banking transactions, whether it's on ATM, POS, web, NEFT, whatever you call it, electronic platform, the volume was 316 million as at 2014. By 2016, that number rose to 912 million. Yeah. That's 188% growth. That's very good. That's a positive. Then if you look at the value of transactions done in 2014 was 37 trillion. By December 2016, that number rose to 57 trillion. That's 54% growth, positive and good. Majority of these numbers have been driven by two main products, NIP, what you call faster payments, and ATMs. Yeah. So it shows that we've been on the upswing when it comes to electronic transactions. However, I'm going to give you some other numbers that point to the fact that there's a lot to be done. What are these numbers? If you look at the BVN, that's the biometric information we have, biometric verification number. Total number of BVN today in Nigeria as at 30th of July stood at about 30 million, 29.85 to be precise. If you look at our population, 180 million. Take the number of accounts in the banking sector, about 64 million active accounts. If you do that, it shows you that you have multiple accounts. So you are banking about 30 million Nigerians right now. Yeah. That means well over 70 million Nigerians are either underbanked or unserved. Yeah. So what that tells you is that there's still a long way to go, even though there's been some progress. And I'll give you one on the ATMs as well. In Nigeria today, let me compare Nigeria to Brazil, for instance. In Nigeria today, one ATM is to 10,500 people. In Brazil, is one ATM to 1,000 people. So there's still a long way to go. Even though we are innovating, things have been done, but we still have a long way to go.
Right.
There are challenges.
Very comprehensive review there. But Tunji, your thoughts on the progress we've made as well. You obviously are advising a lot of clients in this space. What are you seeing, and what's for you is something that we need to celebrate, and where do you think we need to make the biggest moves forward?
Okay, thank you very much, Wally. I think I agree a lot with some of the points and the numbers actually that Folorunsho mentioned earlier. But just to back it up a bit, I think one of the things we are also seeing, in addition to what those numbers tell us, is that we are making progress in the type of transactions that we can now do. For instance, we are seeing a lot of banks do more data-driven transactions. So some of the transactions Folorunsho mentioned are transactions that, largely around payments and transfers. Historically, we've been making a lot of strides in this space. And that comes also from the fact that the banks have as much data, to do some of this transaction. Also supported by the fact that NIPS, then comes to sort of mediate between the banks, so you can do interbank transfer in a real-time manner. So that data is really key to that. But we are now also seeing the banks, develop models to do some digital lending, which before now it's been a bit of a struggle. So I think we are making significant progress, in terms of the evolution of the type of products, that you now see on the digital platforms. So it's not just the era of, payment alone. We are now doing more around even account opening on the channels. We are doing, some banks now are doing payday loans, and all these are data-driven transactions, if you like. So I think from that perspective, there's a growth, there's some sort of growth we are seeing. So I think we are making good progress.
All right. Wale, you obviously work a lot with the banks, especially on the payment side. And give us your thoughts on what you think is coming, and what we are beginning to see technology enable in terms of services.
There's been significant progress when you look at the data that we have. But I think the other thing to look at is that data has presented us opportunity to actually learn from the market and the customer base or the consumer base at large. While you see a lot of quick adoption on instant transfer and ATMs, the adoption on some of the other channels have been a bit slow. And it gave all the stakeholders a lot to learn.
So what is driving other channels like
POS,
the POS
web,
machines? Okay.
It's been slower than those other channels. And it's giving us the opportunity to learn what is driving the adoption of some channels versus the other ones. And that is giving us insight into product development, what we can do better, security standpoint, tokenization of transactions, and things of that nature. On the payment side specifically, which is one area that for us as a company we really focus on. When you look at web, this year alone, when you compare web transaction between January and June, you sum it up, the value is about 90 billion naira versus POS, for example, which is at 500 billion, versus instant payment, which is now around I think about 27 trillion naira. There's a big gap. But what we're saying with web is it doesn't really matter what we do if we don't instill trust between the customer who is paying and the merchant who is receiving payments. We'll continue to have that lag. And that's why we're coming up with innovative solution that enables customers to pay without releasing funds until they get product and things like that. Those are the things driving, companies like ours to innovate and look at how we can work more with the banks to provide solutions. Because when you still look at it, anything that has the bank on it, the customers trust more versus any other channel. So if there's a way we can collaborate more with the banks to ensure that such products come into the market and there's education around it and there's support by the banks to push those products, I think what we're witnessing today is a tip of the iceberg of what's really to come in this market.
I think one thing that is quite interesting is that the consumer is now situated in what we can describe as the digital economy, and digital banking is just part of that right now. And maybe you can speak to this point, Tunji, about how financial institutions can better situate themselves. One point that I think many have spoken to is that there's possibly a need to tweak the model in a very disruptive way, where a digital bank, so to speak, should be sitting within the traditional banking institution. And that digital bank is now engaging that consumer in the digital economy.
Absolutely, and I think one of what this point also speaks to is the fact that everything is about the customer, isn't it? So you have a situation where the bank is no longer at will to meet the customer the way the bank wants, but the way the customer wants. Now, one thing you find, we talk about the growth we are seeing. One of that growth is also in the USSD space. Right. What you find
USSD, for the sake of our viewers, what is that?
So the USSD is the unstructured supplementary service data, which sort of helps customers to be able to access mobile banking services without a smartphone. So with some sort of short code, you can access a bank's service, if you like, on this mobile platform. So what we're seeing is that the access to the service is key consideration, right? And that access to the service, we know there's a need for some sort of connectivity between the supplier of the service, in this case, largely the banks, and the customers. Then the challenge we've seen over time is even though we are making progress as a country in terms of the infrastructure, internet and all that, but there's still a big gap between the people that should accept this, the number of people that should access this service, and the people that can afford the connectivity infrastructure. So things like USSD has come to bridge some of those gaps in that, without a smartphone, you find customers being able to access these services. Now, when you go into what that means, it means a relook at the model for the banks. A look at the model of how they reach the customers, a look at the model of how the digital services are enabled. So I think that is a key consideration in the whole discussion. Another consideration is security. You mentioned the issue of trust. And as you know, depending on the demographics you're speaking to, there's a big issue of trust. For instance, the people we call the millennials, so people that are probably born within the year early 80s and 2000, this is the way they know how to do banking, because they've entrusted their relationship on social medias. They've entrusted they do a lot of transactions already, e-commerce transactions on these platforms. So to be able to trust a banking transaction on the mobile or internet channel is really not a big deal for them. But when you now look at the older demographics, you find it's a bit of chain management that you need to do there. So security is another consideration when it comes to adoption. So I think as we go along, we are beginning to see banks tackle those key areas to enable them drive the adoption they are looking for in the market.
Well, maybe we can speak to Folorunso on this point. At Union Bank, for instance, how is the bank changing its model, if you like, to really get neck deep in smart banking?
Okay. To say this, the first thing you need to look at, I will talk about the industry, then I'll be specific about Union Bank.
Sure.
For any institution or bank to survive in this area where we are, first you need to understand who are your customers, where are they located, what do they want, how do they want it. Those 4 points are very critical. Then you tell yourself, how do I make sure that I continuously innovate and be ahead of the curve? So what have we done in Union Bank? One thing that you see clearly today is that whether you like it or not, the mobile platform or the mobile device, you see, I didn't call it a mobile phone, it's now everything that defines the next level. And I will tell you why. In Nigeria today, we have 150 million telephones, mobile subscribers. Yeah. That's about 81 to 83% penetration. And out of that, 53% of them are subscribed to data. So it means we can reach a lot of people. So what we did at Union Bank, for the last 2 years, we did a lot of what you call focus group or customer insight sessions. What did we do? We went to the customers to find out what are your basic needs. Yeah. What do you want to do? You'll be amazed that some customers don't want to do web transactions. Some customers will tell you, I want my transactions done this way. Some will tell you I need a token. Some will say I don't need a token. Some will tell you I cannot leave my shop. And let me tell you that something about this. 90% of Nigerian businesses are SMEs. So what did we do, for instance, in Union Bank? With a new mobile platform, for instance, that we just released recently, we did something that will bring all of our mobile sales agents on the field, and those customers, wherever they are, that they can locate themselves, and it will allow our mobile agents on the field to serve those customers right at their locations, whether it's cash withdrawal or cash deposit. That is what you call bringing innovation in technology, but applying it to solve a customer's problem. So for us, we start with the customer. The customer experience is very, very important. One of the key things we are also trying to do is to be completely transparent. We are building a bank for the average Nigerian. What do I say transparent? What do I mean by transparency? See, I have promised you that my channels would always be up. My ATMs will always be up. One of the things we found out from customers is when you have problems, how do we know on time that you have problems? What we did, the same tool that allows us to monitor our electronic platforms, especially our ATMs and co, we have now exposed it to our customers. You can see right there which of our ATMs are operational. The next one is data. You must know the customer. Your needs, Wale, are different from my needs. And it is important for me as a bank to be able to say, For instance, I see your working capital for the month. I know what you do in terms of business. How do I help you to grow this business that you do $1 million every month in turnover? Can I make this business $2 million every month? And I look at what you do. Right from my platform, I'm able to use my data to do a credit score for you, do a few things for you, and propose to you, Wale, if you do your business this way, if you change the way you do this, I'm not just providing ability for you to make payments, but to say, Wale, you might need some working capital to improve your productivity. And I'm able to do that efficiently with the data I have. Then I've added value to your business. And that is what we're doing today at Union Bank.
Interesting points made there. But I want us to move to another point, and that's how we bring e-commerce into the digital banking conversation. And I know your business is invested in an e-commerce aggregator of some sort. Can you just help us appreciate the opportunity for growth and how this ties to digital banking? Because I made the point earlier that the consumer today is part of a digital economy, and part of that economy now is where they can buy goods and services online.
Yeah, and I think it's a good point. I think to the average consumer, the whole separation of digital banking, e-commerce, and what have you is our separation. To the average consumer, it's one and the same thing. Even though they would usually start from one, the most trusted channels, and then, the evolution is that they move to the other channels. For me, I always say that the start of e-commerce in Nigeria was actually the start of our cashless, society, which was started by the central bank, adopted by the banks, and a lot of the stakeholders came in to actually make it work. And I think we made a lot of stride. I think a lot has been said about how we're doing it. But e-commerce specifically, I think, we've seen growth of like 25% year on year, and it's been consistent for the last 5 years. There was a dip last year due to the economic downturn, but we're seeing things pick up again. But e-commerce growth is still being stunted by a few things within our market, which we have to address. One of them is payment infrastructure. I've mentioned that there's a need to bridge the gap of trust that exists between the customers paying for goods and the merchants who are selling their goods. Because there's a mistrust, that's why you see a lot of e-commerce transactions actually not happening electronically, but still happening with cash, which is what we call pay on delivery in our markets. So there has to be consciousness by the bank, supported by financial technology companies and other stakeholders, to look at that. I mean, when you monetize that on a yearly basis, our e-commerce value in Nigeria is above 500 million. If 90% of that is still happening off electronic transaction, that's a lot that we can still bring into electronic transaction. And you wonder why we even call it e-commerce in the first place. If it started on the web, was ending at my door with cash payments, right? Yeah. So that there's still a lot to be done around that.
Let's talk about that trust deficit. And I would like to hear your perspective on this, Tunji, because incidentally, I was speaking to, I think it was somebody at NIBS, and he was asking whether or not I had adopted some of the new solutions out there. And I said no, that I tend to want to just go on the web, do my thing, make my payment, do my transfer. I feel more secure as opposed to moving on the phone. And because I felt that, like many people, it's probably easier to manage that way. But the person made a point that with what the type of strides that we've seen right now, that it's perhaps better for me to adopt and just make sure I secure it to the extent possible, password and so forth. Because there is that risk that people, as long as they can get my phone number, they can do something with my banking, with my bank account. So your thoughts about this issue around trust and whether or not we have those safeguards in place right now?
Okay, thank you, Wale. I think the issue of security, and I think more specifically in the cyber world, cyber security, is a very important consideration when we are talking digital. Folorunso was mentioning some of the key considerations, and I think part of the enablers, like you're alluding to, is cybersecurity. Because really what is the game changer for some people is how secure the channels are. Now, when you look at what has happened over the years, we've actually moved from a situation where, first of all, there's a lot of trust issues, which is coming from the fact that people have actually suffered these cyber incidences. And what we find the banks doing, and some of the players within this digital economy doing more and more, is that there's been a lot of focus in the cybersecurity controls. Even the regulators, there are a number of regulatory compliance requirements that you have now. For instance, banks are now most banks are either PCI compliant, PCI DSS, which is the payment card industry standard for security. Now, it's important because what comes with that sort of certification is a lot of security controls put in place from an infrastructure point of view, a process point of view, and the banks are really making a lot of investment in security infrastructure, from monitoring, which Folorunsho mentioned, the ability to even on a real-time basis pick up security incidences and be able to do something about it in a more proactive manner. But even beyond this, there are a number of preventive controls that we're seeing banks put in place, from ensuring that the infrastructure itself is hardened, to prevent some of the cyber criminals from being able to wreak havoc for the customer. So I would say there's still a number of room, or there's still room for improvement in that regard, but definitely we've moved from where we used to be in terms of the old issues with security on the digital platform to a situation now where a number of the channels are compliant to some sort of international standards or the other, and there's a lot of focus on that in terms of the CBN just ensuring that whether it's the quarterly scans that the banks are required to do or other security remediation activities that are ongoing. So right. I think that...
Let's talk to a banker. Maybe you can speak to how secure the digital space is today.
Okay, so security in terms of whether it's digital security or physical security, but I will focus on digital security. It's a problem that's everywhere in the world. In terms of security, I will tell you one thing. I will go into card security. EMV, for instance, what you call European MasterCard and Visa, in terms of having chips embedded on cards. Yeah. I will tell you, for instance, today Nigeria is far ahead of the United States. If you remember 2008, 2009, there was a prevalence of fraud in Nigeria where the mark stripes were being schemed badly. Mm. And I was part of the committee set up by CBN. One thing CBN did very well, they brought the bankers, we formed the committee with CBN, and for over a year and a half, we met constantly, defined the requirements for the industry and the migration part. And that, after that period, reduced card fraud. I'm not saying we still don't have card fraud, we still have them. Now, there are also regulations that CBN have put in place, and the banks also have put in place robust policies around making sure that these platforms are secure. Now, one of them, I will give you an instance. By CBN policy, if you're going to do transfers, for example, on mobile, there are some things you need to do. Token, either it is a soft token or hard token, depending on the value of the transaction you're doing. And that makes it a bit more secure for you.
So those are standard sets that every bank must comply with.
In Union Bank, what we have done, for instance, when you come onto a new digital platform, what we've done is that you will be able to register, we will be able to authenticate you on the mobile phone you have and everything you've put to us as your data on our system, and securely find out if you are the real person. Let's assume your son took your phone. Okay, he's trying to register. He can't do anything except top up that phone. What have we now introduced? We've said with your card details, you will now be able to activate and increase your limit. How do you do this? So that means your son must steal your username, must steal your password, must steal your phone, must also get you your ATM card PIN, must also get your ATM. So I'm giving you more comfort, at the same time giving you convenience to be able to do those transactions within your environment. Security, as we have it, is a continuous process. You will continuously improve. You learn one important thing. From the pattern of things, for you to have issues around security, there are three things that are involved. There's the technology part, there's the process, and there is the people part. Those three things you continuously learn as an institution, and which is what we do. We've put in place a number of systems. Are we saying the frauds are not there? A few are there. But compared to where we were before, we've seen some good improvements.
So it's clearly a focus, and hopefully we're making some progress there. As we begin to round up this segment, I want you to speak to this point around increasing penetration into the informal economy, because that really is the next frontier. How do we get these services available to, the local market woman and everyone else that is not in that formal economy that we know today?
I think at the macro level, there are still some things that are preventing other people from coming into financial services and financial inclusion. We still have infrastructure issues. You mentioned the ratio of the ATMs to the population, still over 10,000 people have to use one ATM. And even with that, the problem is further compounded by geography. So a lot of ATMs are in Lagos. If you go up north, they are fewer and far in between.
In my opinion, I think as much as the ATMs are very relevant, I think that the model in Nigeria needs to be different. I think there has to be a way through which people can get cash from agents when they need cash, and then, of course, drive further adoption of digital.
Those are there. Those are some of the things. But, the basic infrastructure also needs to be improved. In a place where maybe in a whole state you can count the number of ATMs that are available, it doesn't matter how many agents are there. The agents are still humans. There are times they are not there. There are times they have issues with their own lives.
So we
still need to be able to. We still need to be able to put automation in front of people for people to be able to use it. We need to take advantage of mobile penetration. I think a lot has been said about USSD and SMS. I think those are going a long way to including the banked, from getting more bank services. We now have to go outside of that to say, even if you are not banked today and you have a mobile phone of some sort, there's a way you should be able to relate to bank services. I think that those are some of the natural next steps that we have to start looking at in bringing people into the fold.
All right.
I want to add a quick point to what is said. In terms of, you will see agency banking is not developed, but there are things that CBN is done to make it a bit easier. But I will tell you, for instance, I want to make you an agent, Wale, and you live in somewhere in Irele, for instance, or somewhere in Okitipupa. In your village, you have a store and I've made you an agent. But your total turnover, for instance, for the day is maybe 5,000 naira. You are meant to serve your community as an agent. Wale, how do you do that? Now, I as a bank, I need to be able to provide you some services. But my nearest branch to you, I can't be everywhere. It's maybe, and it has to be profitable for the bank as well, because the institutions are not charity. So this is why it is important in terms of regulations that all of us sit down to crack this. Can the government come into place in terms of the regulators? When I say, can CBN, for instance, come into an alliance with, let's say, a NIPOST or a few other institutions out there where you've got presence in all, and I say, I will help you with the logistics of cash and a few things. So whether you like it or not, cash is still very prevalent. You can't get cash right now. So what do I need to put in place logistics-wise to make banking affordable, available, and accessible to the people in those places, like in Okitipupa that I mentioned?
Tunji, 30 seconds if you can. Add your voice to this point.
I think the issue of financial inclusion is still the very big opportunity for the banks to crack, like we've all said. I think the government, the regulators, and also the banks need to do a lot more in terms of, the infrastructure. So the infrastructure on the supply side is I think where we are now, the infrastructure looks to be a bit on the right side. But when you look at on the demand side, the customers, we talk about mobility and mobile being the king in terms of accessing this infrastructure, these services. Now, you're either accessing it through internet or you are accessing it through telecommunication network. So these are two basic connectivity channels that needs to be at the right place for these people to be able to access the services. And I think a lot has to be done from a government point of view, enabling and further deepening the internet penetration as we've seen it, and also the telecommunication network. So in Lagos, for instance, you have relatively good services from this service provider, but when you go further down the country, you find that the services are not really there, and where they're there is really not usable for the kind of services you want. So it's a lot around infrastructure for me.
That was the first part of a discussion on smart banking. Join us for the concluding segment after the break. Welcome back to Banking the Future, and today we look at how technology is changing the business of banking. We're now in the second part of the discussion, where we'll focus on the role of regulators in catalyzing the adoption of digital banking. My guests in this segment are Folorunso Olunimoloye, Head Alternative Channels at Union Bank, Ehosa Amoigui, Managing General Partner at EcoVC Pan-African Technology Fund, and Olatunji Odumobani, Senior Manager, Technology Advisory at KPMG Nigeria.
Regulation can go a long way in improving innovation and enhancing innovation in the industry. Sure. And I will tell you, for instance, a customer who lives somewhere in Ikotuegbe needs to drive maybe 5 kilometers or 10 kilometers from his house to get to the nearest ATM. He spends 1,000 naira to get there and 1,000 naira to go back, and is going to withdraw 5,000. How does that play out? This is where regulation comes into play. Today in Nigeria, the cost of doing business has gone up. An average ATM that you buy for $10,000 to $15,000 before now still remains the same. The price is the same. But in Naira terms, we know that price is doubled. The cost of maintenance, the cost of operation, the cost of getting these ATMs into place is gone up. And that explains why you see in Nigeria, we are regulated to charge 65 naira per transaction. Good. It is very good.
And that has been the case for many years.
For many years. Yeah. But if you compare to the US, where you are charging a few cents here, you are talking about $3 to $5 in the US or in Europe. Now, there's a cost to getting these ATMs operational. There's a cost to running them. There's a cost to putting them in place. And there's a cost to cash as well. But we've been taken into an area where we're not able to grow as the country should go or the industry should go, because the cost of getting this done is just too much on the banks alone. In developed world, you will talk of independent deployers. For instance, in Europe, majority of the ATMs are put in place by independent deployers. Nigeria tried the concept here, but because we overregulated that part of the industry, it died after 2 years. So regulation can go a long way to really ease the adoption and innovation that we need in the industry. And I just give you that as an example. So today we're talking about one ATM to 10,500 Nigerians, whereas in some developed countries, or developing countries, so to say, you're talking of 1 to 1,000. And that speaks volume to what I said about someone having to move from his house. Go to some places today, you will see long queues for ATMs. Not because the people want to be there. The customers really need service. And that brings the point home that, again, the regulators and the players in the industry need to sit down, come up with a common front. If service is going to be given, people are even ready to pay for these services. That's what we found out in most of our research. Nobody wants to get a service, everything for free. No. Give me a service that is commensurate with the value you propose you will give me. And I will be able to reciprocate and give you, in response, another value that will match the service you're giving me.
Right. Tuje, I would like you to speak to this point, and maybe you can also address it in the context of mobile banking, because I have spoken to suggest that the regulation in Nigeria is limiting the evolution of that, because the telcos are not allowed to operate in that segment of the business the way we've seen them operate in places like Kenya. Your thoughts on how regulation could be stifling growth?
Yeah, well, so I think the Safaricom M-Pesa product that you speak about, for instance, is a testimony to how regulation can sort of stiffen the growth of a particular product, because the regulatory environment in Nigeria is clearly different from what you have in Kenya. And if you look at the fact that, and I want to look at it from two perspectives. Yes, we have a lot of regulatory requirements that sort of stiffened or have stiffened the growth of some of these products. But yes, you also have some initiatives that the regulator has taken in recent times that sort of helped, so banks are forced to comply with certain security standards, which I mentioned earlier. Security still remains one of the biggest inhibitors to adoption of digital. So things like PCI DSS, payments card industry data security standard, most banks are either compliant or trying to be compliant with that today. If you go to the mobile banking space, you find that there are also a lot of security initiatives, that the regulator is driving generally for the banks to be more ardent in terms of their security and also monitoring. But I think there's still a lot of room for improvement. So when you talk about the areas that can be improved, security, for all we know it today, is still the biggest concern. And the ability of banks to be able to monitor the security incidences and respond to it, I think there still needs to be a lot. There's still a lot of room for improvement in that regard, for banks to be a bit more real time in the way they manage security incidences. The other bit is around infrastructure. So we have a lot of infrastructure challenges in Nigeria, like we know. So he talked about the fact that we are still having queues in the ATM, and if you sample 1 out of if you have 10 people on an ATM queue, probably 8 of 10 of the people on the queue are trying to get cash to do business they can do with card. So there's still a bit of concerns about the POS working. There's still a bit of concern about ability to do cashless transactions. So a lot of these concerns is around infrastructure inadequacies we have in the country. So when we speak about regulator, it's also about government, doing more in terms of, scaling up what we have today to enable the infrastructure, to enable the availability of infrastructure the banks need to really go digital.
Yeah, but Jose, can you speak to the point about infrastructure and who really needs to bear the responsibility of providing the underlying infrastructure to really allow digital banking to move to the next level? We've heard of many very great initiatives driven by the banking sector collaboratively, things like the BVN, for instance. But your thoughts on the next things that need to be done? We were speaking earlier, for instance, about the credit registry. Who needs to spend to upgrade that and so forth?
Right. So I think, because banking by definition is a multi-sided marketplace, right? You have, customers who come in and they're demanding to be served. They are completely indifferent to what needs to happen for that to occur. Now, the bank, on the other hand, is looking at this customer and saying, I have to invest in software. I have to invest in analytics. I've got to invest, in partnering with service providers. I've got to do all these things. And, someone has to bear the cost. But that's, by definition, what business is, right? You take an advanced view on, your future cash flows and you bear the cost.
But wouldn't you say that there are some costs that really need to heavy costs that need to support the entire industry? Take, for instance, the evolution of NIBS. I think if we pulled NIBS out of the Nigerian banking equation, for instance, I'm sure it's a different environment altogether. And somebody had to drive that. And I know the central bank and, of course, the banks also came together to do that.
Correct. And so that's but, there's the whole, people just talk about, this whole concept of, too big to fail or things that are fundamental to a system, right? And so, in NIBS is that kind of platform infrastructure that maybe, the private sector should either bear, on a prorated basis, or maybe the government steps forward and says, we will match, right? Those I get that, right? And that's, I think, fundamental. But there's also the infrastructure around connectivity, right? And who bears that, right? So there's, the telcos are very important to that. The fiber providers are very important to that. Because nothing happens without connectivity. Nothing, right? So there is that. But I think to the earlier point, which is, what are the constraints you are going to put in place to allow me to recover my costs? And how fast are you going to let me recover my costs? That's fundamentally it. So no one is going to sit down and say, I'm going to invest $10 million in infrastructure upgrade, if you're going to handcuff me and tell me my payback period is 40 years. No one's going to do it. They just will pass on it, right? So I think a lot of it is about thinking about it. And, we talked about, infrastructure like, mobile money and mobile banking. There are so many interesting things that are happening in other countries. And for a variety of reasons here, there are interesting dynamics. I was looking at some data on Mshwari, which is sort of this overnight lending, with M-Pesa and Safaricom. And the actual default rates are, I think, around 3%. 3%, maybe 4%.
And this is on unsecured lending?
Yes, unsecured lending, underwritten by your mobile signals, right? And the kind of volumes that are being done. And so you're thinking, we have issues here, right? Everybody's talking about we're not serving the customer, we're not getting SME financing, we don't have enough view on the risk. And then you come back to, okay, I want to underwrite a customer. What are the limitations? Oh, no, I have to go check the credit bureau. I'm the one underwriting the risk. What is the basic information I'm willing to do to do that, right? And these are just some of the very interesting plays. Let me give you an example of sort of what disruption happens when you're looking at payments.
Sure.
So in the UK, you've got, these touchless, these cards, right? And they put a cap, because of security, they put a cap on the maximum amount that you could essentially charge, which is £30. So Apple Pay shows up. Now, Apple Pay has figured out, and by the way, this is a multi-year process. They first of all built defensibility around a different product, which was iTunes, and stored value, your credit card information. Sure. Then they built sort of an open exposure API to allow that information be used in other services. Then they built the actual infrastructure around merchants. And it's incredible. No one talks about it, but the speed at which Apple Pay is becoming the default paying mechanism at retail is startling. But you know the reason why? Because they took out all the friction. They built the security infrastructure into their device. So your fingerprint, we know what you're doing, we have location, we know where you are. And so all of a sudden you sort of solved this very interesting problem, but it goes back to it. Apple was willing to do that. And Apple was, of course, they had to go and solve a few issues. They had to go and discuss with Visa and MasterCard. Those are the big boys in the industry. But fundamentally, they were always thinking about, how do I make this easy for the customer? And who's good? And no one is now going to, so Apple's, they have a deal, so they get, bips on those transactions. But no one is saying, no, you have to eat the first 3 withdrawals on this ATM. Like the ATM is free, right? So things like that. I think it's really thinking about the unit economics of these businesses, thinking about the infrastructure that is going to be required, and fundamentally sitting down with folks and saying, what is it that you are trying to achieve? Because I get why government wants, because the truth is there are a lot more fragile consumers in this market than, say, in the US, right? So that, that's always going to be sort of a basic concept.
I think that's a very fair point, and we do know that financial inclusion strategy is to penetrate into that market segment. But my thinking now is that could we be missing the direction here in terms of where we should be allowing, if you like, we're like forcing subsidies where we shouldn't. That's the sense I'm getting. But is there a more creative and sustainable way to push this financial inclusion strategy forward? I want to get your thoughts on that point.
And I'm going to use the telco business as an example, the telco industry. Remember, before the advent of the mobile platform as we have it today, and telephony as we have it, the days of 090. And then what you would see is that to get a phone, it would cost you a arm and a leg. And you would have to come to Marina or some other place and exchange to make a call. The moment the GSM industry was introduced and we started, the cost at the initial stage was quite high.
I remember, I think it was 15.
Oh yes, it was quite high. What is the cost of a call today? That is when you allow market forces to dictate what happens in the market. It's a business of demand and supply. Value to the person who is offering, the offerer and the offeree. If I can offer you good value and it makes sense to you, you will be ready to pay for it. It's the same thing that you talked about for banks and for Union Bank, for instance. For us, it is all about the customer. If a customer says, I need a cup, I don't need to give him a mug. I give him a cup. So, you allow the industry to open up, allow regulation that would promote innovation and allow people to do things rightly and charge at the right value.
So you're going to make a point?
So I was going to, he had one more point to finish.
One more point. Now, so I brought it home from that angle in terms of allowing the market forces to dictate what happens in the market. Eventually, the price equilibrium will be achieved that you require. One other thing that we feel, we talk about infrastructure. It's very good to have infrastructure. Do we know that we have human capital deficiency? It's a major problem nobody's talking about. Today, try to hire a very good programmer. It's very difficult. So, even from our curriculum to what we do, we need to change all of that. Today, I'm very much aware that the very best technical hands in Nigeria are leaving this country, and they are living in drones. Today, Canada is a very juicy destination for Nigerian programmers and Nigerian technical officers. Why is this so? The Canadian government has recognized that skill-based immigration is very important for growth. Right here in Nigeria, the human capital to support all of the things we are building is not there. Right from the curriculum, from the secondary school to the university, we need to change them. We are using curriculum that are very old. They don't support innovation as we see it today, and they don't support the changes that the world requires and the economy requires. Today, I will give you one more example. Nigerians are very enterprising, giving. Most of our businesses and most of the transactions that take place within this economy are driven by medium and small-scale enterprises. Guess what? In this whole arena, how many of them are banked? Very small number. For the industry to grow and for things to happen, we may want to say radically, the government has got post offices everywhere. We've got landmarks everywhere. In every local government, there's a government presence. Can we do a collaboration in such a way that we bring financial literacy, we bring education. Education is not just sitting in a classroom and learning. We take it to those areas using the infrastructure that is on ground in a basic format and ensuring that people can get value. And then use that also today. You talk about why has mobile money failed in Nigeria, or has it not been very successful? I will tell you why. You want me to serve you. I'm in a place called Irele in Ondo State. At Irele, where I stay, within the suburb where I stay, my turnover in a day is about 2,000 naira. And I'm an agent. Let me say even 10,000 naira. I'm an agent, I'm meant to serve you. So I'm meant to serve 100 people within my community. By the time my turnover is 10,000, at half day, maybe I've done 4,500. And people are here to demand for services I can't offer. Whether you like it or not, your economy is still cash-based. So what do we need to do differently to get these guys working? Can I use infrastructure that is there? The regulators come in with the government and say, okay, can we provide cash in a form to these guys in that area using the government infrastructure that is available? Your post offices,
so the government can support this.
And can support this.
Drive.
And this would help a lot. And then you start to bring these people into the financial system.
All right. Very strong points made.
Yeah, so I was going to just sort of augment one of the things that was discussed. And that is, you know, it's super important for policymakers to sort of really believe that technology in the long run is deflationary. It's what it does. It will reduce prices. It will automate.
History tells us that.
That's just how it works. And it will always work that way. So I think fundamentally, what people don't seem to understand as well is that, you know, while it is deflationary in the long run, it is expensive in the short, right? And so you talk about the telcos and their infrastructure. You talk about what it was, you know, how expensive it was. You know, you can only imagine what MTN went through and fundamentally the conviction about this market in the long run to put all that money to work. Now, the telco business is a very simple business. It's almost like a pension fund. You know, you sit there, you put in the work for 20 years, and then your payments start to show up. But you find that a lot of folks here never have that kind of view on opportunities. You know, it's a lot more short-termist in here than you would like. And so things that are fundamental to reaching the larger population that require that kind of long-run view, right? No one wants to do that because, you know, in the words of the street, everyone wants to hammer immediately, right? So how are you going to actually deploy these things? You know, there are technical ways to solve some of these problems. You know, being able to reach the person that is furthest away from your traditional infrastructure. Because, you know, money is a daily habit, right? It's a fundamental thing to just livelihood, to the way you live. So why we're not able to use technology, which, by the way, has never required visas, has never required ticket. It can get to anywhere. So I think it's you know, policymakers have to sort of believe that if technology is deflationary, let's think about the actual cycle. Let's figure out what it is that you need right now. Let's figure out what you have to be able to invest. How you maybe possibly diffuse the cost of that investment, right? And then let it roll out and let it give it time to attach. You know, the other thing I think we've seen consistently is that everybody seems to be chasing the same set of opportunities, right? Particularly around banking, right? So again, it's, you know, let me go after the folks, my existing customers, right? Let me, you know, because the other customer is the person who's making 2,000 naira a day and whatever it is, doesn't really matter. But again, going back to my point about, you know, who's more profitable to my telco, right? You know, maybe that's the part that, you know, these existing banks don't think about, maybe the new banks will think about, right? Because I have to tell you, the assumption, you know, we talk about sort of the penetration of feature phones, right? But it's a red herring, because you think that most people are still using feature phones. But a lot of people, particularly those who may not necessarily show up on the sort of, you know, per capita income type tables, have two phones. A lot of them, by definition, the typical consumer is aspirational. A lot of them are getting access to use smartphones, right? You think about, well, how many people are using WhatsApp? WhatsApp is not a feature phone play, right? Right? It's a daily habit for everybody, right? So people are on there, right? So the question is, okay, are you building products and services that sit on the channels that reach the mass market, right? And, you know, you get to do a lot more experiments. Again, regulations show up. You know, I want to do a small experiment. No, I need to go and get approval from CBN. I want to do this, I want to do that. That's an issue, right? So, you know, I get, you know, banks are regulated, they have to be, you know, probably less regulated than, you know, the pension funds. But, you know, how are we allowing folks to really develop products and services for the folks? Because statistically, if you are building products and services based on your own internal data, right, you have a problem because you have confirmation bias. It's the same set of people.
Okay, let me speak to what you've just said.
We have only a couple of minutes left, but you can make a very quick point on this.
I disagree with his notion, but I'm going to say something here. The belief is that people say the banks go after the same set of customers. It is not true. And I will give you an example of what we do in Union Bank, for instance. Do you know that we operate a model called the Hunter model in Union Bank? Majority of the accounts we open in the bank today are not opened within the bank, as in customers coming in. We go after those customers. We've understood something, and we've done it very well. We do what you call focus group. We go into a market deliberately, or go into an area, an obscure area, find out what those guys require. As I speak to you today, the Union Bank of today, some of the things we do, we receive cash on the field. We do things with customers on the field, provide solutions to their need. Because the man at that corner does not need to leave his shop. Yeah. Every minute counts for him and his business. That we do today. And we go after those customers that you will feel 2,000, 1,000 is small. Because, again, banking is not about value. It is about volume.
Yeah.
And it is about being able to do it and do it right.
And I've heard a lot about this transactional banking model, which seems to be the future. But unfortunately, I have run out of time. I would have loved for you to make some more comments. If you can make it like 20 seconds, if you can.
I just wanted to add a point on the regulation and how it can, better enable the banks to operate. I think the relationship with the banks and the regulator needs to be better. We talk about this a lot. We talked about, even on this table, we've spoken about examples where, for instance, in the lending space, the banks have data to underwrite such risk better than some of the structures that have been put in place around getting the credit score and all that. I think the banks need to begin to do a lot more in terms of proving these concepts to the regulator. Yeah. For instance, you are able to
make that case.
Yes, there are a lot of business models that have been developed around this, and that can be shown to a point where the regulator can then move in such directions.
And on that note, we've come to the end of today's edition of Banking the Future.